Hey everyone, my name's Andy. My channel is Finding Value. If you guys like making money and finding where the value is in the market, this channel's for you. Click subscribe. And if you like this content, click the thumbs up button to help me out. Leave any comments that you like in the comment section about this video or anything that you'd like to see in general, or some of the stocks that you hold or want to share, or anything that you want to know about this channel, or maybe some possible topics that you want me to cover. Today I'm going to go over commodity boom, which I tied to precious metals because precious metals got absolutely smoked today. And I want to see, what do the charts say? Where are the support levels? And let's see if we're breaking any or if we're right at a support level. And what should we do, right? What should we do about this? So let me go into the presentation and I'll talk about a commodity boom that's coming. So looking at precious metals, they went down a ton. Should I sell my gold and silver companies? Is the bull market over for commodities? Oh my God, I'm scared. What do I do? Let's look at the data. Let's see what the data has to say. So this is a chart of gold that I got pulled up. And there's this is a pretty strong trend line. This is a stronger trend line than the one hit here. It's got 1, 2, 3, a whole bunch of hits. It's pretty strong. But we've got this sell-off here. And it came all the way back to this upper trend line. And we're sitting right there. And what I want to see is this momentum needs to get worked off. So maybe tomorrow it's going to come, or Monday I should say, come down, pull back up. But I want to see the momentum's change here and come back, or this resistance support line actually hold. So that's one thing I want to watch for next week. Here's silver. It's in the same exact scenario. We're right here at this, which is now support line for this line coming down. I want to see this momentum get worked off and change and move up. I'd like to see a very big move higher. Or possibly, maybe they try scaring more people out and we see a big wick on the bottom like this in a reversal day pattern like that. Because sometimes next to these big guys, you're going to see a reversal day like that. So that's a possibility early next week. So let's look at the data, the market conditions behind this. I'm showing this is a new housing starts. And the reason I'm looking at new housing starts, this is new homes being built in America. That's what I'm looking at. That is what is inflationary. Whenever we go over this 1.5 level, it means that we have inflation. So if you notice, 1.5 here, this is in the early 70s inflation. And then remember that huge pullback in gold that happened? Well, here's your leading indicator, the housing starts declining. And then the last half, it really jolted back up again. And then usually after this, 3 to 5 years after this market top, gold peaks completely. Same with here. This is 08. It peaked in roughly 2011. But notice this was a commodities boom here. This was a commodities boom here. And we're going to enter a commodities boom. This green arrow signals that commodities are cheap in relationship to stocks. It means that commodities are expensive in the red circle. So green is cheap, and we're going into an expansion phase, which means the market conditions are ripe for a commodities boom and for gold to go higher. So, and remember, gold went higher from 70 to 80. Gold went higher from late 90s to 2011, and gold's going to go higher here. Next, this is the Dow to gold ratio. We're still in this channel here. I think it went up somewhere around here. We're at the top of the channel. We're gonna see if this thing breaks. Now, I don't know if this necessarily is a huge indicator or a driver of anything. I'm just charting this to show you kind of where it's at in relationship with time. But I think over time, if we have a commodities boom, we have an expansionary phase of real estate, which we're in, this would decline to the downside and gold would outperform stocks. That's what would happen eventually. So we would see a break to the downside of this pattern. Next, I've got the price of gold, which is gold, and the price of platinum, which is blue. Last bull market from 98-ish, platinum had outperformed gold the entire time here, basically. It really got above it and started moving. Now, from this point, from 08 all the way down to 2020, the opposite happened. Gold outperformed platinum. But just recently, if you look at the shaded area, on the back half over here, gold's been declining a little bit and platinum's been absolutely exploding higher. So if you were to look at a ratio, platinum's outperforming gold, and that means that platinum, not just platinum, but commodities are going to outperform stocks. It's done that every single time the commodities has outperformed stocks. So we're seeing it in the data. Now here's the 10-year Treasury yield notes here. The yields decline over time through this section here because housing from '08 in all in this area was recovering in recession and recovery phase. Interest rates are low during that time period. The housing market was really messed up. Interest rates, the yields, declined before the '08 crash, signaling that a crash was coming. If we had a crash coming over here, we would see rates declining, but they're not. They went up today, which is very weird because it makes me think that gold is being manipulated. Anyway, foreclosures ran out in the recovery phase here, and we started to really take off, and you could see the rates starting to go higher. This was signaling that a problem was potentially brewing, and rates was going down. And then we had the COVID crash. Now, did this crash, was it caused by COVID? I don't know. Because why were these rates declining before the crash? It was signaling that something was wrong already. But we are heading higher with rates. It's looking pretty good. And we're above the trend line. More signals. This is our buying point for the green, signaling that commodities are a buy. It was even a buy even back here. This whole area was a buy for commodities. Right when it started to pop out, it would have been signaling a green buy in 2017, I think. 2017, 2018, 2019, and 2020. Next, this is the euro dollar. This is euro over dollar ratio. Declining means dollar's doing well. Increasing means that the euro's outperforming the dollar. Buy signal for commodities, sell signal for commodities, and here we are moving on up. It means that you should be in commodities this entire time as the euro outperformed the dollar, signaling that the dollar was weak and we had inflation. We had a reversal here, broke its upward trend line, and was declining. Commodities are out of favor. We do not have a huge inflationary environment yet, and we should be cautious. We got the commodities cheap, buy signal, and we broke to the upside for the euro dollar. This is more data showing that we should be in commodities and that this is not being, it's not going to reverse and break through this pattern. It broke out to the upside. So commodities are game on. Here's emerging markets. They do exceptionally well in commodity booms. One, they have currencies outside of the US dollar, and if the US dollar is weak, they outperform, plus they sell a lot of commodity types of things. EEM, which is emerging markets, outperform, performing very well. Went sideways during that euro-dollar mix, broke to the upside. Emerging markets is out now, game on. Here's our buy signal. Here's our sell signal. Correlates perfectly with emerging markets. And here's your data for it moving up. Next, bonds should underperform in an inflationary environment. Broken uptrend with bonds and another broken trend here, moving on down. They were even being sold off today. Tips, Treasury inflation protection securities. Very strong uptrend, meaning that we have inflation and it's still in its uptrend. We had a sell-off a little bit today and it is still game on. Still looks absolutely wonderful. Copper, looking great. Big picture of copper. This one, it was in a congestion period. Yields were declining in '07, which was here. The yields were dropping down. Copper eventually followed yields. Now we've got yields going up. We've got copper going up. We've got all of the signals are all strong except for precious metals. Weird, huh? So I would assume, and I would use this pullback in precious metals to accumulate, to cost average in and buy more because the winds at our back, and there's nothing telling us from a signal and charting perspective of the leading indicators that something's changed. Now, '08, something did change. That's why we had that crash. The '08 is completely different than what it is today in terms of market fundamentals. I showed you that with the yields. Yields in '07 were declining. People were just bomb rushing into bonds. We don't have that. We have yields going up. They're selling bonds. We've got all of the commodities remaining very strong. We've got the euro breaking out. We got emerging markets breaking out. Copper breaking out. Platinum breaking out. They're all breaking out. and they all broke out. So this is a pullback. It's a back test. They're trying. The market is trying to flush you out of your shares. Don't let them have them. Accumulate more. That's what I'm doing. I'm going to accumulate and cost average and buy more with whatever money I have left because this is a very good, I think, opportunity. We'll continue to monitor this stuff. Be calm. If you see a big move, be calm and look at the data. I can, subscribe to this channel. I go over these market updates. If we see something that I think scares people, I'll go over it. And if you think you see something else, put it in the comments section. I'm glad to cover whatever you guys have. Thanks for listening. This is Finding Value.